All right, you're about to bid on a job, but all of a sudden you see that there's a bond requirement. You need to have a performance bond. What exactly is that? Stay tuned. In this video, I'm going to discuss what it is and how to possibly get one for your business. What's up, guys? I'm Mike Asalas. I started this channel, The Business Insurance Playbook. My goal is simple, and that is to help you become a better buyer of business insurance and ultimately win the insurance game. I've been in the industry for 13 years, helping businesses manage risk, look at insurance options and surety options, and I want to share what I know with you to hopefully help you out. If you find what I say helpful, do us a favor. Give us a thumbs up and subscribe. Hey, the first thing that you need to know is that surety or bonds are not insurance. They're totally different. Insurance is saying, hey, if something happens wrong, we're going to step in and cover a claim for you. Bonds are basically saying, the bonding company is saying, we are financially guaranteeing that we think this contractor will get this job done, right, as laid out in the contract. That is ultimately just what a bond is. Now, if you don't do what's in the contract, the surety company is saying, we will step in and make sure it gets done. No, not themselves, but they'll go find another contractor. And so surety companies underwrite and they expect to have no losses, where insurance companies actually expect some losses, right? That's just part of the game. But surety, there's not supposed to be any losses. All right, so how do you go about getting an actual performance bond? Well, there's a couple things to know. First, to even bid on that job, usually you'll need what is called a bid bond. I'm not going to get into the details on this video, but they go hand in hand. If you do the bid bond, it's expected that you get the work and then you do the performance of the actual job, right? So the first thing to know is it depends on the job size. If you're looking at jobs that are less than 750,000, there's a lot of what we'd call fast bond programs that will essentially approve you for a bond based off of just your credit score and maybe like a one-page application. This can be really great if you've never done bonding in the past and you just need something quick. Just note that if you're going to be doing bonded work consistently, this is probably not the best route to go. The rates are surcharged a little bit compared to a traditional bond that you'd get through, more of a traditional program. One other thing to note is that if your credit score is, I'd say 700 or higher, these programs should work fine for you. If it's below that, you might have some challenges and need to do further underwriting. Okay, so if the job is going to be over $750,000, then there's going to be more information that's needed. A lot of those fast bond programs I just mentioned, they won't really work for you. So there's going to be additional information like fiscal year-end financials, maybe 1 or 2 years, personal financials possibly, a WIP, work in process schedule, an application, maybe they'll want to see a bank line of credit. So all those things come into play once you get above 750. This is why it's really important to work with an agent, especially at this level, because they can help guide you through this. Now, if it gets above a $1.5 million project, for the most part, then it's a different level of scrutiny. So maybe just in-house financials aren't good enough at that point. They'll want to see actually CPA compiled, reviewed, or audited financials, depending on, again, a lot of different factors around your work history, your experience, your backlog, a lot of factors. But the main thing to know is that talk with an agent that can guide you through this process. All right, so if you're considering looking at a job where you need bonding, I would strongly encourage you to talk with an agent who specializes in surety. Because they're going to help you, one, just get better rates if you establish a relationship with a surety. Also, then you're going to have more confidence and you're going to stand out from your peers. If you can say, hey, I'm backed by a surety company. I'm good for $5 million worth of work, where maybe some of your competitors can't even show that. So I think it's a good thing to help you stand out from your competition. Another reason is it can be more quick to get the bonds approved, right? And that can hold up your ability to bid on a job in time. And ultimately, like I said, a bonding agent is just going to help consult with you, right? They can really be a coach to help take your business to the next level, which is where you probably want to go. So what is the cost of a bond? Well, depends on your state you're in, probably the type of work you're doing, but generally speaking, 1 to 3% of the contract value will be your total cost of a bond. It's really important to keep this in mind and to know this before bidding, because what you should do, bonus tip, is include that cost into your bid. You want to pass that back on to the company or the organization or the entity requiring you to provide a bond. If you like the way that I talked in this video, if this is something you feel like you're missing from your own agent or your own experience, or you just need help, don't hesitate. Give me a call, send me a message. I'd be happy to help you out. Thanks.